Will a market crash hurt valuations? Yes, it will. Maybe it won't. Let's talk about that. Hey, I'm Tim Diesel. I'm a commercial real estate consultant. This channel is designed to give you tips and strategies in your investing business. If you're a broker, this will definitely help your clients. So will a market crash hurt the commercial real estate space? Well, there's two schools of thought here, and let's talk through both of them. If you are a person or an investor, I should say, who bought, and maybe you bought 4 or 5 years ago, you're doing great, and you haven't cashed your chips, you haven't really taken those chips off the table, then you're going to be kind of in a unique position, and I'll tell you why. Because of the way the money supply is being treated right now, it's very difficult to find a lot of high-yielding investments. So if you had $1 million cash and you had it in a high-interest savings account, you're only going to get so much. If you put it in the stock market, you're going to get a lot more, but everybody knows that's kind of going crazy right now. Who knows? It's a gamble. You could buy gold or silver. You're not really going to cash flow off of it. That's an option. And if you were to buy real estate and you were to make 3 or 4%, that's actually not bad compared to what's going on, right? So the issue, I think, is going to be finding other investments and the money supply. The problem is when things go down, they all kind of go down together. It's not very often that a certain sector in commercial drops like a rock and everything else goes up completely the opposite direction. So what you're going to have is you're going to have retail space right now, for example, is just getting killed. Well, it doesn't mean no one's ever going to need retail space again. It just means all that overbuilding that we did. Now remember, we built a lot of retail shopping malls and retail space, I think it was in the 70s. We overbuilt. There's way too much retail space. Plenty of it. I would probably not recommend anyone get into anything too big in terms of retail that they can't handle. But if there was an opportunity or a project and you have the chance to get in on a retail building, which is what I've been telling everyone to keep your eyes open for, and you get a great deal on it, well, there's a way that maybe you can configure that building. Maybe you can't turn it into a multifamily building, but I've seen a lot of buildings around the country where they'll have retail on the bottom, multifamily on the top. I think we're going to start seeing that a lot more now. I think the way property use is going to have to be a little more versatile, so where you're going to have a lot more flex space. You might have even office with multifamily. You might have a little bit of everything. Things are going to be broken up a little more. You might even have more industrial properties near the city. It just really depends on where your market is, depends on where you are in your area. So we are answering the question, though, how is this going to affect commercial prices? The biggest thing is going to be financing. Right now, lenders are really scaling back. They're being really tight in the commercial space I'm talking about. If you're getting a home loan, I think those are done a little bit differently. If you're trying to get a commercial mortgage, they're really wheeling it in a little bit. Why? They're concerned. If they weren't concerned, they'd be lending more. They'd be giving more money out. LTVs would be at 90%, but they're not. They're down to 60, 65%. They're really scaling it in because they're concerned. They don't know what's going to happen. Or maybe they do know what's going to happen. Unfortunately, banks get bailed out, so they're going to get all their money anyway. So even if you default on a CMBS non-recourse loan, it doesn't really matter. You're not getting hurt. They're not getting hurt either because they're getting all their money back, and they're probably just going to liquidate the property to some other investor, and they're going to do okay. So unfortunately, banks always come out ahead. The issue is once you have a foreclosure or a foreclosed property in one area, and you have a couple other foreclosed properties in another area, Now let's stick with retail here. Though it's very difficult to attract new tenants into kind of a dead zone, into kind of an area where there's not a whole lot of traffic, there's not really a whole lot going on, right? You need a mixture of everything. You cannot have all multifamily all by itself. Everybody's rushing to buy multifamily because they're saying everyone's got to live somewhere. Everyone's got to live somewhere. Well, yeah, but they could move back in with mom and dad. They could do all kinds of things. They need retail goods. If we're losing jobs, how are these people paying rent? Now, the opposite, let's say for office, when companies start shutting down, they're letting these office spaces go, right? Their headquarters, where there's a lot of salary employees, they're probably going to leave the retail space last because that's where they're selling everything. That's where their goods are coming from. Industrial is probably going to be a little safer because you still need manufacturing, shipping, all distribution, all that sort of thing. And it really just depends on the asset class. So I don't think values are going to drop overnight. I do believe they're going to go down, and depending on how easy they are to acquire, that's going to change things up, right? So I'll give you an example. If you're a guy who maybe you've owned your property for X amount of years, and maybe you have a tax problem with this property. I see this all the time. Whenever someone has a tax problem, they need to liquidate this thing, whatever the asset is. And they're really not so concerned on making a profit. They're concerned about paying their tax bill and moving on. Well, property tax doesn't go away just because you don't have a tenant. It doesn't work that way. If you don't have a tenant, you still have to pay all this stuff to keep things going. Maybe someone sells a little less than they would have sold if it was fully occupied, fully performing. That's one example. It could be the sales of the tenants are dramatically going down, and the tenants are just kind of, hey, how do I get out of my lease? It could be the major tenant left and the surrounding tenants are allowed to leave because in their lease, that anchor tenant, once they move out, they're able to go. So there's a lot of different variances. Now, if we move to multifamily, the thing that scares me about multifamily is never been the Class A stuff. It's been the Class C. The Class C are the workers that have 3 or 4 or 5 jobs. Well, if they don't have a way to pay you rent, I don't know how they're going to stay there. Now, there's still a hold on evictions, but sooner or later, you're going to be able to evict people and get them out of your property. And when you do, well, that's when we're really going to see what's kind of happening with everything. So towards the end of the year, we'll really see what's really going on. Now, if you're a person who is looking for somewhere to put your money, the first thing you're going to think of is multifamily, because that's what everybody says the way to go is. You're very rarely going to think of industrial. You're probably not thinking of office too much. And if you've watched the news, retail is probably not the way to do business. So it's really going to be dependent on financing, what's the money supply like, and really which tenants are going to stick around. Because they're not all going to go away. Even in retail, even in office, some of those tenants still need space, right? If you have a staffing company, maybe you could work it out to where everyone works from home, that sort of thing. If you have a retail store where you're selling clothing, sure, you can do online, that sort of thing, but people may want to come on and try the clothes. You may still need some retail locations. There's so many different ways this can go, and I just really be careful. I've been saying this for a while. Be careful. Be wise with your investments. If you're in an investment you're not too sure of, if you're thinking about selling, this may not be a terrible time. But just try to get good, solid financing. That's really the key in a lot of these deals. If you have a 3-year interest only, the problem is it's great. It's fantastic for cash flow. If you get out of it or sell it sooner than the 3 years, it's the prepayment penalty that usually hurts you. It's not it's usually not anything else. The prepayment penalties. If you haven't kept your loan long enough, that's the part that starts to hurt. If you keep real estate long enough, it'll go through the cycles. You'll be just fine. The problem that I have found in human nature When everything is going down, people feel like, I better sell, I better get out of this thing. That's probably not the best way to do business. You probably want to hang on to it. If everybody else is selling, don't follow the herd. But be really careful and don't panic at the first sight of anything. But I do believe in the next few months, the market is going to shake up a little bit. So you want to keep your eyes open. And depending on the asset class, there's going to be a lot of opportunity. But just be careful. You should be saving your cash and just kind of looking around for opportunities. And they will show up. Let me also add that a 1031 is not a terrible idea. Exchanging a property into another property, similar, maybe to save on the tax, is not so bad. A lot of times the disadvantage right now is you're overpaying for something. Well, true, even if you're overpaying upfront now today and your money is still held in an asset that cash flows, it's not so terrible. The difference is when you're looking at a home, like in a residential investment, well, if you paid $100,000 for your home and you're underwater, that's a tough thing because you have to pay for that mortgage out of your pocket most of the time, right? You got to go to work, you got to have your job. Where in the commercial space, it's a little bit different. You have your tenants there paying for you, so or helping you make that mortgage payment. So you really got to take care of those tenants, and you got to make sure their needs are serviced. And it's not a terrible idea if you just wait around and do nothing for a little bit. But just keep your eyes on what's happening, because I have a feeling when it does happen, it's going to happen really quick, just like it's happened this year. Remember, beginning of this year was totally different. By March, April, I want to say late March, could have been late April, lending changed overnight. They just completely changed. The secondary market went away, LTVs reduced dramatically, hotels went underwater. I mean, things just got really, really bad. So it can happen much quicker. So don't be alarmed, don't do anything crazy, but keep, just be careful, be conscious of what's happening, and look for the next opportunity in your market or wherever you are. I hope that was helpful. I hope you enjoyed it. Like this video, subscribe to this channel, leave me comments, ask me questions, let me know how else I can help. I really appreciate you watching.